Hey guys, I have a massive amount of information I want to cover in this week's video. Advanced pattern formation, simple pattern formations, structured continuation trades, but most importantly, how to turn your trading around if your results aren't where you want them to be at. So there are three types of traders out there: successful traders, struggling traders, and failing traders. In today's video, we're going to focus on the latter two, which means the struggling traders and the failing traders. And if you're stuck in those two categories, one of the best things you can remember is that in order to make money in trading, you need two things. You need a chip and you need a chair, right? That is an old poker reference where basically it says that if you don't have any money, you can no longer be at the table. You don't have a seat. And if you don't have a seat, you can't play the game. If you can't play the game, you can't make money. And the same thing goes for trading. As long as you have money in your account, it gives you the opportunity to trade. If you have the opportunity to trade, you have the opportunity to grow your account. Once you go broke, however, you can no longer trade and boom, you're done. I bring it up because traders, and specifically traders that are in that failing category, are doing something extremely wrong. They either entered the market under kind of false presumptions of what trading is. Maybe they got into trading and their ego's a little bit too big and they're trading off of feel and just gut feeling, all that fun stuff. But whatever the reason may be, they are consistently losing money, and they are consistently losing money quick. And I get emails like this every single week from traders that saying, "Hey Akil, I'm losing $1,000 a week, or I blew 50% of my account. What should I do?" And if you're in that category of trading, my advice is always the same. Stop the bleeding. And what I mean by stop the bleeding is that stop trading, right? It's no different than treating a wound, right? If you can imagine the money that you're losing in your trading account being very similar to a gushing wound, right? Sorry for the violent reference this week, but it is very similar. The first thing that you need to do is put some pressure on it, stop the bleeding to start the healing process. And trading is the same thing. It's obvious that you're in a bad mind state. It's obvious that you have no idea what you're doing in the market. And it's obvious that something you're doing isn't right. And if you keep it up, all you're going to do is lose all of your money. And you're going to be put in that position where you don't have a chip and you don't have a chair. So stop trading, stop losing money right away, and then we can start the healing process to getting you back on track. So the next category is going to be the struggling trader, or the boomer busters, the wounded crab as you hear us refer to. And the fix in this category is a little bit different. Typically these traders aren't just profusely bleeding money out of their account. They're doing a little bit good, a little bit bad. They're kind of break even. They're treading water. They're not bad enough that they have to call it quits. They see some light at the end of the tunnel where they're doing good things and they can see a potential future, but they're not doing it consistently enough to really make anything worthwhile out of their trading. And when we work with traders that are in this category, the problem typically lies in one of two areas. Either the trading strategy or the trader. And I guess it could be both as well. And with both those categories, we can go into deep dives and go on for hours about different things to kind of look for in there to assess yourself. But to keep it short and simple, assess your trading strategy, right? Assess your backtesting results if you have it. If you don't have backtesting results, that's a problem in its own right. But assess your trading strategy, go back through your historical trades, see if you're doing everything correctly, and see what can be fixed or what can be adjusted in the market to give you a better performance. On that same note, if you're looking through your historic trading strategy and you notice that, hey, or trading results, and you notice that, hey, I'm doing something wrong, I should have done this, but I was supposed to do that, or I was supposed to do that, but I did this instead, then you know that the fault may lie with you and the trader. So again, it's either you have a trading strategy that doesn't actually work, and typically that comes from not putting in the work beforehand. Maybe you just saw something on the internet, or your trading coach or mentor. I had a person that I spoke to who said he's in a trading group and they were all given the same strategy, and I'm not sure if he ever tested the strategy, but do you actually know that what this person gave you works? Right? It could be you're trading perfectly and maybe the system just doesn't work. So it could be that, or it could be that you're doing something that does work, but you are self-sabotaging it. So the first step to turning things around is to identify what category you are in. If you're in that failing trader category, the first thing to do is stop trading right now, stop the bleeding. Understand that you're in an emotional state. The more you lose, the more you're going to want to make it back. That's going to lead to more revenge trading. That's only going to lead to you losing money even quicker. So stop right now, do a complete reset and start thinking about if you want to take trading seriously? And if you do, what step do you need to do to get on the right track? If you find yourself in that middle category, the wounded crab, again, dive into those two categories. One, trading strategy. Two, personal trader, right? You yourself. Now, after you've taken these steps of identifying what's wrong and taking the proper actions to go about fixing them and laying out a plan to put yourself on the path to becoming consistently profitable, the next step is to find an accountability partner. And this was some advice that I gave to a guy on Instagram this week. And he asked the question, he said, does an accountability partner need to be a coach? Does it need to be a trader that is better than me? And the answer is no, it doesn't. I'm sure, and obviously coaching helps. Obviously, if you have a trader that is more experienced than you, it helps as far as the mentorship role and their ability to give advice. But an accountability partner just needs to be someone that holds you accountable. It could be a best friend, it could be a significant other. They don't even have to really understand about trading. Again, it helps if they do, but it simply needs to be someone that is going to keep you on track. So when you present them with your plan saying, hey, this is what I'm going to do, this is where when I'm going to do it by, they need to be someone that can call you up and say, hey, that deadline for A has come, did you reach that level? Just someone to make sure you're doing what you're supposed to be doing, and so that you don't slip into the old habits that you did before. So we're going to start off on the Aussie Canada, because I believe this is a pair that we took a look at in last week's video. But in general, if you are a continuation trader or just a trader in general, because some of them have pretty good counter opportunities as well, the Canadian pairs are definitely going to be ones you want to take a look at. Canada had some amazing employment news to end the week, and we saw a lot of directional movement from those pairs in the market, and that's going to open up some really good continuation opportunities. Also, we have a few of them coming into previous levels of structure, so you would think that there may be some relief as well. But here on Aussie Canada, here's what I'm looking at. I'm looking for a potential bearish continuation, right? And I want you to pay attention to this on the daily. We started off by breaking and closing below our previous structure lows right here. And once we get that break and close below, we can predict that price is likely to continue lower. Now, we did travel down lower during the week, and we did come to a previous level of inside structure, but there's another level of structure that's on my radar that I think we can attack as well. And that's going to be a little bit lower right in this area right here. We have a little bit of a structure swap around the 96 cent level, so 96 even handle. If I move this up a little bit, it's not going to be perfect, but you can see this was a previous level of structure where price action found support and also found, here we go, let me get my thing on there we go, support, and then also found resistance in the past. To go along with that, we actually have a harmonic move happening in the market. We have an AB equals CD pattern, and we may be setting up for a third version of that. So what I mean by an AB equals CD pattern or an equal measured move, you'll hear me refer to it in both ways, is that one leg is equal to the extension, right? You can see how we had our first initial swing high to swing low right here. We then had a pullback that looked like that, and then the extension was essentially the same length as the original extension. And well, if we drag both of those on to current price action, if we drag our pullback, look at that, almost even. If we drag our extension on and make a prediction, voila, what do you know, right? Another one-to-one measure move is going to put us right down at that level as well. So we're getting some pretty good confluence on that level. So Aussie Canada, looking for shorts. Now, we do have to break this current level of structure. So if you're a counter trend trader, a structure trader, this can also be a level where you look for long opportunities, look for a little bit of relief. But if we violate these lows right here, I would definitely look for a continued move back down to 96 flat. So something here for both bearish continuation traders and bullish counter trend traders if we can hold that structure. Next up is the dollar Swiss. This is going to look familiar if you've been following along each week with these videos. This was the head and shoulders that we had to start the year, right? Head shoulders right here, break and close, retest, and a rally up. A fantastic move. It actually went well past my initial projection for that. And during this week, we were actually looking for bullish continuation opportunities on this pair. We had a break and close above our highs right here. We were looking for a pullback. We ended up violating some structure, and that idea ended up going out the water. But what we have now may be a potential advanced pattern setting up, maybe a head and shoulders as well. We can
take a glance at that as we go down to the lower time frame. But what I'm looking for here first and foremost is a cipher pattern, right? So if we measure our move out, right, I'm gonna kind of shortcut it for you guys. Just take my little cipher tool deal over here. Our first swing high, swing low is gonna be our X to A. This pullback is gonna be our A to B. This extension down here is gonna be our B to C. And if we can if we can make our way back up to the 786, this zone from the 786 up to our X leg is going to be our potential decompletion for a potential short trade. This is one of our advanced pattern formations right here. So a potential bearish cipher here on the dollar Swiss at 93.44. Now, if we go down to a lower time frame, you're going to see a potential head and shoulders pattern as well. This can be an opportunity for a different type of trader. If you're not a pattern trader, more of a classic pattern trader or a simple pattern trader, whatever you want to put head and shoulders under. But here's what we have with the head and shoulders. If I take my head and shoulders tool out, right, we have our left shoulder. This retracement is going to be the first part of our neckline. This extension down here is going to be our head. You can see we come all the way back, giving us a nice horizontal neckline. And then currently we're putting in a right shoulder. Now, this isn't a particular pattern where I'd be interested in entering aggressively at the right shoulder. We didn't get what we needed with the right neckline for that. But if we can move up and if we can violate this neckline, that's going to set us up for a potential bullish opportunity with this head and shoulders bottom. So potential advanced pattern formation for the bearish traders in the form of a bearish cipher, potential bearish cipher, and a potential bullish opportunity for the bulls out there with this head and shoulders bottom. Lastly, we're going to take a look at the Dixie, the dollar index, and kind of the theme for today. I want to give you guys a potential buying opportunity and a potential selling opportunity. That way this video is helpful for hopefully those on with different types of trading strategies and those on different sides of the market. But I'm looking for a bullish move here on the Dixie, right? So most recently we've done this. We've been in a bearish trend here, but you can see we've kind of settled off here. We put in the head and shoulders. Again, this is going to be similar to the euro dollar and the dollar Swiss. All these pairs are pretty much the same, or its index and those pairs are pretty much the same. And we violated that level to come back and retest it and then rally up higher, followed up by another pullback, right? And this pullback came to a previous level of inside structure, right? Look left, structure leaves clues. Now, we already started to reverse off that level a little bit. You can see we retraced down. We put in a very nice 3-bar reversal right here. These 3 boys right here, 1, 2, and 3. And then we start to move up. If we can get a retest of these lows and a double bottom right here, that's going to be basically a secondary hold at this same level, which is called a double bottom. This is going to be a good opportunity to buy and look for a retest of the highs here up at 92.47s. Now, if that level happens to be violated, right? If we get down to that decision point and it happens to be violated, we're going to have something else occurring as well, or 2 things, I should say. One, right, if we go off the theme of our last pair, I think it was, and we look at this equal measured move, might have been the first one actually, I don't know what order I'm going to put these in, but we would have a 1-to-1 measured move that's going to put us right back at previous structure looking left. Also, if I take my Fibonacci's out and I drag a Fibonacci retracement from our swing low, let's try that again. If I drag a Fibonacci retracement from our swing low to our swing high, we're going to have another potential advanced pattern formation. This time it's going to be a bat pattern. This first move up, this impulsive leg, is going to be my X to A. This first retracement is going to be my A to B. It does not hit my 618. Make sure you check your data. If it does, it's going to be a completely different pattern, one that is probably not valid yet. But that's going to be my A to B. This next retracement is going to be our B to C. And if we can come down to this 886 Fibonacci retracement down at 90.84s, that's going to be my CD completion or the start of your zone if you're someone that draws it out in zones for a potential bullish bat pattern. So again, if we come back and hold this level, right, prove to have a valid double bottom there, I think it's a good buying opportunity at that level. If we can break past that level, that'll offer us two things. One, it's going to offer us continuation opportunities intraday from 9130s all the way back down to about 9080s. But then once we get back down to this 9080 zone, that's going to offer us another bullish opportunity, not only at structure looking left, but in the form of an advanced pattern formation as well.
So if you're a new trader or maybe a struggling trader looking to do a restart, I recommend checking out these two videos over here. They are very basic videos on technical analysis. I like to think of them as the foundational elements of reading a price chart. And the information in them is going to be crucial no matter what type of trading strategy you go on to trade. So check it out. Let me know what you think. Before you leave, hit that like button. Leave me a comment if you have any questions. And make sure you subscribe. That way you don't miss next week's video. All right, see ya.